Hi, everybody. Welcome to this week's Middle Class Investor. This is Seth Martin, your host. It is Sunday, November 22nd, and next week is Thanksgiving, and I hope all of you have a good Thanksgiving. If you're traveling, be safe. Thanksgiving is always a good time to hang out with family and catch up and all that, but if you are traveling, be very careful because I saw something that there was going to be 25 million people traveling over the Thanksgiving holiday, so that's a lot of folks. But anyway, we had another up week in the market. It looked like there for a while we were going to take out last week's highs where we started down from, and we didn't quite do that. That doesn't mean we won't do it. Just something to observe. But it looks like the market definitely, wants to go higher here. It's a really, really strange market, and if I hadn't already sold my 401k, I'd probably be selling it now. An interesting statistic I heard, and let me just share it with you. Let me get out of this and go to the NASDAQ 100. The NASDAQ 100 has actually already got new highs. Just slightly, but new highs nonetheless. And so the statistic I want to give you is the NASDAQ 100 for the year, as of Friday, is up 419 points in 2015. Now, I've been talking to you about how narrow the market is, and I just think it's interesting that 478 points of the 419. So in other words, without these two stocks, the NASDAQ 100 would not even be higher for the year. Google and Amazon make up 478 points in the NASDAQ 100 in 2015, and the NASDAQ 100 for 2015 is up 419 points over last year. Now, two other stocks that have been contributors in the NASDAQ have been Facebook and Netflix. Less so recently Netflix. But the market is just very, very narrow. There's some other performers. I didn't write them down, so I'm just going to kind of go off the top of my head. Adobe still looks good. AutoZone still looks good. Like I said, Netflix and Facebook, had this little pullback here recently. It's not as steady up as, say, AutoZone and Google. Like if you look at Google, just marching higher. If you look at Amazon's crazy because there's been really no way to get involved with Amazon because recently it's like here's earnings, so it gaps up, does nothing until the next earnings, gaps up, does nothing until the next earnings, and gaps up. So unless you've been willing to hold Google over earnings, there's not much to do there either. So anyway, just thought it was interesting that the NASDAQ 100 is up 419 points, and Google and Amazon's contribution to that index is 478 points. So it just speaks to the narrowness of the market. Money has been flowing out of smaller caps. I mean, if you look at the Russell, for example, Russell's flat or down. This is because money's been flowing out of smaller caps and flowing into the Dow, DIA, the S&P 500, this large cap stock. So that's usually a sign of defensiveness in the market. It doesn't necessarily mean the market's going to go down next week. It just, although it could very well go down next week. In fact, it's a little stretched here, and I'd be surprised if it didn't go down some next week. And we'll talk about that in a second about where it might go to. But I think it's probably going to bounce. I mean, we've had pretty big moves here, and the index looks pretty strong. So zoom in a little bit. So one of the things we've talked about before is that, sorry about that, I'm hitting the wrong button. The midpoint of these large candles is usually a good place for support and resistance. So we could see the market pull back, kind of like so, into this area right here, and then bounce and start making its way higher. It might not get much higher than this May high, or it could go. It could go as high as this area around 2,200. I don't think that's as likely, but it could. The only reason I say that is because this move right here, usually this move and your last move in a 5-wave are about the same, roughly about the same, or sometimes the 5-wave will be 62% of the wave one. But even then, you're talking about getting up into this 2175, 2200 area. So I don't know. It's hard to believe that the market could do that, as narrow as the issues are. But anything's possible. That's just the market. You gotta kind of just start from a place that anything's possible. Let's go to our watch list so I can get the right stuff up on the screen. Let's look at the VIX. How come I'm not seeing the VIX here? Where is the VIX? Well, maybe I removed it from this list. Wait, what is this? No, that's the SPY. Well, let me just type in the VIX, because I do know the symbol. So VIX is VIX, and you can see we had after a pretty good expansion volatility last week, right up to this diagonal trend line here, the VIX sold off pretty decisively. That's a pretty good sell-off. Basically, as far as it went up, it went right back down. So you could see the VIX expand a little bit this week, maybe around the midsection, maybe even a little higher in this market. But I don't know, the odds favor the market's probably going to make new highs. So just get ready for that. But it is an extremely narrow market. There's so few stocks participating. It's going to be a very weak run up there. You could actually have a good move up there, but if you do, it's not likely to stay up there for very long. So just be careful. Don't get too greedy. If you've got some profits for the year, you might want to take those and kind of sit on your hands. If you look at some of the lesser markets, like the Wilshire 5000 is always a good market to look at. You can see it's nowhere near these new highs, and it has a more traditional looking pattern, like this is the first move down. This is maybe a correction. We're not done with this correction, but maybe the correction gets up into this 2250 area, 250 area, and then starts to roll back over. So looking at that, there's the value line index. It looks a lot like this. If you look at the global Dow, it looks a lot like this. You just have a lot of the market's just very narrow. Without Google and Amazon, Facebook and Netflix and some of these companies, you just wouldn't have a lot going on. And a lot of that is commodity and energy related. There's just a ton of energy related stocks and commodity related stocks. And there's just been a lot of damage in the market. And so it's very narrow. If we look at Japan, it looks like Japan wants to kind of move up here, but it looks somewhat corrective here. You might see Japan make a new high. Might get into this. The UK, I haven't looked at any of these markets lately, so I'm looking at them with fresh eyes right now. The UK just looks choppy to weak. Germany probably looks choppy to weak. Yeah, it's trading sideways. what was it? I was going to transportation average. We still have the transportation average is still, it's still in this Dow theory, this non-confirmation Dow theory, where the Dow transportations sell off at about the time the Dow Industrials makes new highs. This is a divergence that happens in the broader market, and right now the signal is still intact, so nothing has changed there. In fact, maybe if the Dow makes new highs, we'll look to see if this makes new lows. That would be interesting. Treasuries, if you look at the 10-year Treasury, it's moving up to kind of sideways here recently in the last couple weeks. Same thing with the 30. It's just rates are right in that middle. I mean, they could roll down and make a low below here, or they could just chop a little bit and then start lifting again. So I think we're right in an area where it's very, very difficult to tell next week's move. I mean, we literally could go down or we could go up. We're right in the middle of this area that would normally tell us that. I think the odds favor that yields are going to go down a little bit next week. Therefore, bonds are going to go up. And if bonds go up, it's likely that stocks go down a little bit. Let's see. I don't want to look at the 10-year. I've already looked at. Let's go over and look at the dollar. So this is the long-term pattern we have on the dollar, and you can see we had this very strong move, and then this kind of consolidation that's happening here. But we're starting to clear out from this consolidation, and your MACD is starting to turn up down here. So it looks to me like this dollar market wants to go higher. Now we might get a little pullback right in here just to below this low on this red candle. Let's see if I can zoom in on that and show you a little easier. So, maybe a low to right into this area, maybe slightly lower. This chops kind of down to this way. And then we should get another strong move up in the dollar that takes out these highs right here. So look for that to happen and certainly trade it the way you want to trade it. If you look at gold, the pattern in gold now is starting to look a little bit more revealing. Not much, but a little bit. You've kind of got you've heard me talk about an ending diagonal. You kind of got a little ending diagonal pattern happening here. And if that happens, gold is likely to make a new low down here, probably close to 1,020. And so we'll look for that to happen in gold. But then we should see a pretty big rally in gold. In fact, I think you remember I was talking about, that rally coming back in here, and then we had this sell-off right here, so I was kind of shocked by that. But if we get a pullback here, another $50 or so in gold, we should see a really good bounce, probably up into this area, the 1350 area, maybe even slightly higher, maybe around 1400. So I'm going to be looking to trade some gold here, and if you're interested in doing that, you should kind of look for an entry around those areas as well. Silver still has not made a new low yet, although it's getting very, very close. We got this 1391 back here. It looks like it wants to make a new low, but you never know. It could bounce from here and start moving up. So looks like the MACD is trying to curl back up and go to the upside. We'll just have to wait and see what's going on here. Certainly difficult to trade these markets. I mean, they're just very choppy. Some of the guys that are selling options now are probably doing pretty good just because they're selling time in this choppiness. Let's go to NinjaTrader and look at, let's look at the DAX. We've already looked at the DAX, but let's look at it again. You can see here the DAX, it pulled back pretty hard here, and it even did in this past week, but closed a higher high. So it looks like the DAX wants to keep moving up. Now, it could very well move up a little bit and then pull immediately back just by the nature of the pattern. But it looks to me like the DAX wants to go up into these highs. Or it might stop right around this area. Let me show you. DP off of this previous swing right here. So we'll kind of look for that area first, and then if it gets to that area and it's still showing strength, well, then we'll look for it to move up to the next level. Let's see. We've got. Let's look at crude oil. Still looking for crude oil to move up into this decision point area over the next 6 months or so. So be looking for that to happen. I know there's a lot of high school football going on right now, so maybe you don't have to look at these markets quite as closely. You can kind of focus in on some football during the holidays, and the markets are kind of sleepy during the holidays anyway. So, but it wouldn't surprise me if we kind of melted up from here. And crude oil looks pretty poised to do that. Let's see what else we have here. We've got the UK market, the FTSE. The FTSE, to me, looks like at least wants to go to this area right here, but may not go much higher than that. So keep an eye on the FTSE if that market affects you. We'll just look at the long-term. Well, I've got a 120-minute chart here on the ES, which is the S&P 500, and you can see that we hit this decision point here this week, and so I wouldn't be surprised if the S&P 500 pulls back a little bit, maybe into this 2040 area, and then bounces and starts to move higher again. We already looked at crude oil. I guess that's it for NinjaTrader. I guess that's really it for everything. I wouldn't expect the markets to do too much this week. There's a lot of people that simply aren't in their offices or don't trade during the week of the holidays. Some people don't just because the liquidity's a little lower. The volume's a little lower, and their experience tells them that it's harder to make money during those times, so they simply don't trade anything. But use your rules and do what you do for yourself. But certainly, if you don't know what to do, you don't feel like you have to do anything, trade anything. I'm gonna have I have a meetup group, and I'm gonna have a meetup Monday for those of you in the Houston area if you want to come. It's going to be, well, we're probably going to talk a little bit about options. We had an options meeting a couple of weeks ago where we just talked about the basics of options. We'll probably talk about some selling premium and defined risk trades and things like that, but probably not a whole lot. We'll probably look at some charts and maybe look at the overall market and talk about where it's potentially going. So it doesn't look like the bull is finished yet, but the only but I'll say on that is the market is so narrow, it could easily just kind of chop smaller and smaller as it goes up and then eventually roll over. It could make just a slightly higher high and then kind of roll back over. So certainly there's a lot of risk in the market. I've been talking about that for a while, mainly just because of the presence of a lot of derivatives in the banking system and areas like that. And if those start to go against these banks, they have to sell them. So a lot of times what they'll do is they'll sell stocks or they'll sell things out of their own portfolio in order to cover their losses on the derivatives. So it's really just kind of a forced selling situation. It doesn't have anything to do with fundamentals or anything like that. There's just a ton of derivatives in our financial system, and when some of that stuff starts to get unwound, stocks tend to suffer. So just be careful about that. Don't forget the YouTube, to promote the YouTube, if the YouTube channel, if you're so inclined to your friends, family members, It's just tell them to go to YouTube and search on Middle Class Investor. It's easy enough to find. You can also follow me on Twitter. I haven't been too active on Twitter, but it's at InvestorClass, @ InvestorClass. And usually what I'm looking on there for is something from David Stockman that's interesting, or from Zero Hedge, or something that you guys probably don't read. And if it's interesting, I'll retweet it. There's information from those guys that you just don't get anywhere else. Certainly don't get in the mainstream media, and so that's why I kind of keep an eye on it. Anyway, that is it for this week, everybody. Just sit on your hands if you don't feel good about what's going on in the market, and wait for a better opportunity. And until next time, this is the Middle Class Investor. Thank you guys for coming in. Take care, everybody. Have a happy Thanksgiving, and be safe traveling. Bye-bye.